5 minutes a day keeps poverty away. All right, welcome to your daily financial explainer. Today, we've got a lot to cover. We're looking at why oil prices are suddenly surging, a huge battle brewing in the pharma world over a new pill, a major shakeup in China's EV market, and how Gen Z is completely changing the wellness game. Let's get right into it. First up, let's talk energy. Prices are spiking, and it's all thanks to some rising geopolitical tensions. Let's break down exactly what you need to know. So, get this. U.S. crude futures shot up more than 8% in some pretty wild trading. Now, a jump that big doesn't just happen. It was triggered by one single, very powerful statement that put the entire market on edge. That's right. A speech from former President Trump promising more military action against Iran is what sent the market into a spin. But why? Well, because traders immediately started worrying about a potential disruption to the world's most important oil choke point, the Strait of Hormuz. And here's why that matters to you and me. That strait is basically a bottleneck for about a fifth of the entire world's oil supply. So any disruption there, well, it means a ton of volatility, and it could mean we all start paying more at the pump. Okay, so from a potential battle over resources, let's turn to a very real battle for market share. Over in the pharmaceutical world, a massive rivalry is really heating up. Eli Lilly just got the green light from the FDA for its new weight loss pill, Foundajo, and that sets up a direct head-to-head clash with Novo Nordisk. And this lays out the consumer's choice perfectly. You've got Novo's pill, which shows a bit more weight loss on average. But then there's Lilly's new pill, which is way more convenient. You can take it anytime, you don't need an empty stomach. And look at this. They're launching at the exact same price. Talk about a showdown. And the financial stakes here are, well, they're absolutely astronomical. Analysts think Lilly's new pill could hit nearly $15 billion in annual sales by 2030. You can bet this is going to be one of the most watched product launches of the entire year. Now let's shift gears, literally, and talk about the electric vehicle market in China. Because, wow, the leaderboard there is getting a major shakeup. So the undisputed king of the market, BYD, actually saw its first quarter deliveries drop by 30%. But while the giant stumbled, another player is absolutely surging. That's Leapmotor, which just posted its fourth straight quarter with over 100,000 deliveries. So what's their secret? How are they doing it? Well, this spells it out. They're kind of using BYD's own playbook. Leapmotor has a vertically integrated model, meaning they produce key components like batteries and powertrains themselves. This lets them skip the supplier markups and gives them a huge cost advantage in what is a brutally competitive market. Okay, from cars to supplements, let's look at a really powerful consumer trend that's being driven by the youngest generation of shoppers out there. The supplement brand Thorne is totally capitalizing on this fundamental shift in mindset. As their CEO, Colin Watts, puts it, younger consumers don't think about supplements for long-term prevention. Nope. For them, it's all about immediate performance, things like sleeping better tonight or having more energy for their workout today. And you know what? This focus is clearly paying off for them. Just look at these numbers. A massive 60% of Thorne's revenue is now coming from shoppers under the age of 40. That's a huge slice of the pie. And the growth has just been explosive. The company is on pace to hit $650 million in sales this year. It's a really powerful example of a shift in spending habits. Okay, let's pull all these threads together for the investor's bottom line. So, what does all of this actually mean for your money? Let's try to connect the dots between the geopolitical risk, the intense market competition, and the changing consumer behavior we've just seen. So first, we have to acknowledge a growing source of uncertainty, and this one is a bit closer to home. It seems former President Trump is paying TSA agents without getting approval from Congress, using a $10 billion fund from an old spending bill. So the first crucial takeaway is this. Geopolitical risk is back in a big way. We saw how markets react to conflict rhetoric with oil prices, and this kind of political uncertainty at home just adds another layer of risk that investors have to think about. Second, all this fierce competition in these booming sectors, like the weight loss drugs and electric vehicles, is creating very clear winners and losers. This is where you really want to look for companies that have a clear, sustainable competitive advantage, like Leapmotor's in-house production. And finally, you can never forget about the engine of the economy, and that's the consumer. Younger buyers are reshaping entire industries, and they're rewarding the brands that adapt to their new values, just like we saw with the wellness industry's shift from prevention to performance. Which leaves us with a final question to think about. In a market that's being pulled around by conflict, competition, and brand new consumer demands, where are those hidden opportunities for growth?